And just real fast, checking the Fed funds futures. I misspoke about May. It's actually in June. They're expecting one cut from June to December at one point. Soonest that they're expecting it is in June. It was May. Now it's June. But the Fed is expected to pause January, the March, and the May meeting at this point. And this changes every single day. If the Fed did that, it'd be a huge monetary policy mistake, which, again, we're going to get the Fed meeting at the end of this month. That could be one of the catalysts. We're also going to get the GDP for the fourth quarter at the end of the month, the day before the Fed meeting on January 30th. We'll have President Trump's inauguration January 20th, and I believe that is the very same day as Martin Luther King Day. Even though we're selling off, I still think we get a January rally in all likelihood, unless I see some real evidence that's all she wrote. I still think we're going to reach the upper channel line of the parallel channel in the weekly time frame on the S&P, and I think the the S&P and the Russell will end up diverging from one another. We did in 2022, early 2022. It was also a January top. Could we see that this month? Failed to reach the upper boundary over the last 9 full weeks, and now we're in the 10th week here. We failed to reach with the presidential election rally and the rally we got there in November, and then it continued to December, but we peaked December 6th, and we got a sell-off in December. Powell was the Grinch that stole the rate cuts, and it sold off, and we saw a December sell-off. Never did reach. We came close in December with that triangle that we formed on the S&P daily chart, but we didn't have an upward resolution. We had a downward resolution. Still think we're going to reach this level. We might hit this trend line if we continue lower, by the way. Going back to the 2023 low there, I'll show you why I think we're going to reach this level. It's kind of my thought that we reach it, and that completes the blow off top. Now, because we didn't reach it over here, had we reached it over here, been in the high 61 area or on into the 6200 area, had we reached it over these 10 weeks right here, we didn't do it. Trend line continues to rise to the right of the chart the higher the target goes. Now that's going to take our potential target area. The target is the trend line, but when we come into contact with it, it will take that level higher. Right now, that's looking like into the 6300 area, right around maybe 6325 to 6350 or so. Said I continue to remain bullish. The signals in the daily time frame are showing the momentum bearish. It will revert back to bullish, and I think we'll finish reaching this level because we did not reach the trend line in November with the presidential election rally. And into December, we never did reach this trend line in November and December. We did reach the very last trading day of November, the monthly trend line, but I still think we're going to overthrow that in all likelihood to reach this trend line right here. Now, if we reach it in January, I've marked the potential levels that we could see being reached if we come into contact with that each week during January. The current week we're in right now, it'd be just under 6,300 at 6,285 if we were to get a big surge and reach it this week. So that's not going to be the case. We saw it next week with the inflation data, 6,303, the week of January 13th, and then we have January 20th is Martin Luther King Day. I believe the markets are closed that day, so January 21st, 63.23. If we do that third full week, January, and then the fourth week here, it's the Fed week, January 31st. But it would come in just under the 6350 area, right around 6341 or so. So again, this trend line over the next 4 weeks, this is the potential levels that we could reach if we reach this trend line in January. So again, number is not the target. The trend line is the target. It was at lower levels here. We failed to reach it. Close at the December high, but close but no cigar. I still think we're going to likely reach this level. Now, if we do, it's going to complete the blow off top. Some interesting resistance around that area. Here is the S&P 500. And if we take the peak over here, first peak in 2018, and connect it with the 2022 top, it's pointing up to just slightly higher, right at the 63.40 area, which is that same trend line, our log scaling that I showed you going back to the 2023 low. This goes back further to the pandemic low and the high in 2018. Another reference point, the same level at that low to mid 6,300 area, right around 63.40 or so. This is our linear scaling with the S&P 500. Here's one of the reasons why I don't think that we have peaked yet, and the upper boundary of the channel aligns perfectly with our Fibonacci expansion level. The 2% expansion is at the exact same level where that trend line is, and that would be the last week of January at 23.41. Here it is at 23.42, and that's where that other trend line is coming in that I showed you on the linear scaling. Pretty fascinating. Let me talk more about this real fast. From our low in 2022 to our high in the summer of 2023, the Fibonacci expansion of that move, well, we hit the 1-to-1 right here at the first peak in March in 2024. That was the 1-to-1, okay, the 1-to-1. We pulled back, we resumed the advance, and then in July, we hit the 1.382% Fibonacci extension, stalled out again, and we sold off. Look at that. Peak of stinking boo, huh? We resumed the advance, and we got up to the October high, and we had more volatility just under the 1.618 extension. Had the November election rally, and we moved above that. And look at where we stalled in December. We stalled at the 1.786 Fibonacci. And again, we stalled right there, right on the nose at the December high. I think we're going to end up going higher and hitting this trend line and moving and slamming right into the 2.00% Fibonacci, which again is at 63.42.5, exactly where this trend line is coming into play. I think we're going to go up and slam up into it. And again, that would be not a 1-to-1 like this was right here, but it would be a 1-to-2 if we hit that level. Fibonacci extension of the previous advance from the 2022 low. Are you picking up what I'm throwing down? Pretty fascinating stuff. But we have a confluence of resistance with the Fibonacci extensions, the trend line, the other trend line with the log scaling. When we hit the December high, we were just slightly overthrowing, and we peaked on December 6th, and we hit the trend line in the monthly time frame on the very last day of trading in November. A couple days later, we peaked out. I think we're going to overthrow that level and likely reach this extension level. Remember, the Dow did overthrow its monthly trend line and then turned down off of it sharply. I am still of the opinion that we're going to reach this level, but you have a confluence of resistance, and you have, again, a compelling argument that we could reach this area if we can see a rebound in January after our December sell-off. If we could see a rebound, so we'll be watching that, but pretty fascinating. I was going to put this information at the end of the video, but I decided to put it at the beginning. I made the end of the video last, so talking about this, but pretty fascinating. I have some other Fibonacci levels to show you, but maybe I'll save that for weekend when there is more time. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you follow the link, it'll take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. You could take a moment and partner with me by supporting the channel today. I would really, really appreciate that. Just put everything out there. Just ask that you partner with me and support the channel because I don't have sponsors. They contact me all the time. I turn all those offers down because I don't want to sell you a bunch of stuff. And I think there's a lot of shady deals on the internet. I would just rather share with you this information and then just ask that you do what you can to help out. So please consider partnering with me today. If you could do that, I would really, really appreciate it. Thank you. The VIX was up 11% today, back above the 50. I talked about this yesterday. Again, if you stay above the 50, bad things happen. If we end up dropping back down, the VIX can still fill the gap over here on a closing basis. And again, even go back and test the lows, possibly make new lows. But I have that 50 above the 200. I'm watching that carefully. People saying, well, looks like the market is topped in December. I told you I was looking for a December, January top. I still think we haven't finished the blow-off top. If you watch the video all the way through, you'll see why. The reasons why I think that. You don't normally watch a video all the way through. You want to watch it through today. Showing you some very important things. Now, we had the Dow down by 178 points. And again, the market was down at lower levels. We still closed near the lows, but off of the lows on the S&P 500 and the Dow. The S&P was down 1.11%, down 66 points. Nasdaq was down 1.89%, down 375. The Russell down 0.75%. The VIX was up 11%. And let me move that over so you can see that up 11%. And again, it's telling us now that in the next two trading sessions, there's now an 85% chance that we will have an up day for either a bounce or a bottom. That's what the VIX is now predicting based on the closes, historical closes of the VIX of greater than 10%, up or down. The levels I'm... Okay, we get a sell-off after a bounce to start the new year. We start the new year with some volatility, got a bounce. Now we're getting a little bit more volatility. Important stuff happening. Treasury yields jumping up on economic data led a tech sell-off, and we saw a big drop. We saw a 6.25% drop on NVIDIA after a huge run-up to test the highs, and then we saw also a drop on Bitcoin. That led to a nearly 10% drop on MicroStrategy, which has huge exposure to Bitcoin, and remember, MicroStrategy is now on the Nasdaq 100. So now the Nasdaq 100 is Bitcoin Junior. Bitcoin's down about 5.5% right now, just over 5.5%. It was down over 6% like NVIDIA. Led to the volatility today after this big run-up on NVIDIA. Again, after dropping 16.5%, it rebounded, recaptured all of those losses, just came right underneath the peak here from earnings at that trend line right there from our rising wedge. We got a possible bearish engulfing here. That could be a double top. That's possible. Came up right under this level, so the head and shoulders pretty much canceled out. Now you have a possible double top, but we could just be back testing. We broke out. We broke out over here last Friday. Had a big move up last couple of days, and now we're back testing. And the moving averages are acting as support, as back testing this trend line on NVIDIA. And now the 10 is getting back above the 20, and the 10 is now back above the 50. Hard to see there, but we had this bearish engulfing. Could be a reversal bar, but could also just be a back test after an explosive move higher. We've had this 16.5% sell-off from the height of the low, but from that low, we've rallied up 20% from that low point up to today's intraday high to start the session. We've rallied up 20%, so now we're dropping 6.22% after a 20% move. Nothing goes straight up. So again, I'll be watching, do we get a bigger dump, or again, does NVIDIA go try to make new all-time highs? We'll be watching that closely. But NVIDIA led the charge with the tech sell-off today, dropping 6.22%. Bitcoin down over 6% at the lows, and that caused MicroStrategy to drop by over 10, or drop almost 10% there. We got the ISM services that came in hotter than expected. Concerns about inflation being sticky. Oh no! The bond market is worried about inflation. That's why we're seeing the yields climb, causing the Fed to second guess themselves. So the Feds all now work themselves up. The Feds worked themselves up into a tizzy, all confused. We had Barkin speak today, but last week he was running around with his hair on fire, telling us all about the inflation to come. Since Donald Trump is back in the White House. I'm telling you, the Fed is focusing on inflation when they should be focusing on the recession. He's really worried about the tariffs. It wasn't the tariffs that created the inflation. It was the Fed's very own policies with QE, infinity and beyond, enabling government to do all this crazy spending, which they did, passed out six trillion in stimulus checks. That's what created the inflation as economies around the world shut down. That's what created the inflation. The Fed running around all concerned about inflation when we're about to have a deflationary bust. That's what the Fed usually does. So just wanted to point that out. And again, the could continue. We're about to get the FOMC meeting, the minutes from the last meeting. Pardon me. We'll get that tomorrow during the market session. So again, I'll be watching the support levels and the gap fill from the presidential election, and I'll be watching these certain things. Make sure you watch the video all the way through. Really important video. You got a lot of Fed speakers. You got Waller tomorrow. Fed speakers on Thursday. The market will be closed for National Day of Mourning. President Carter that day. Friday, we get the jobs report. Expected to come in at 155,000 jobs. Previously, it was at 227,000. And again, this will be the December report. Remember, the labor market is showing signs of deterioration. We've created nearly 900,000 jobs, fewer jobs than we did in the previous year, 2023. So we're seeing evidence of that, but the Fed come around and all concerned about inflation. They weren't concerned about inflation back when they were telling us it was transitory, but they're sure concerned about it now. Absolutely incredible. And eventually we're going to begin to see job losses begin to show up, but that's something to pay attention to. Again, at some point in the near future, it's going to happen. For the recession, or as we start the recession, is likely going to start in the first or second quarter. Well, the Fed is telling us, as Powell said at the last FOMC press conference, it's clear we have avoided a recession. It's clueless to what is about to happen, as they were in 2007. Next week, we'll get the inflation data on January 14th. We'll get the wholesale inflation, which did tick up last report, and then we'll get on the 15th, we'll get the CPI inflation. So we'll be watching that. Ever since the Fed started cutting rates on September 18th, they cut them, after going flatlined here, they cut it by 0.5% on September 18th. Two more cuts out of the Fed, and they've dropped now 100 basis points. Ever since September 18th, the 10-year yield has been rising. It paused here, pulled back to the 50-period moving average, and then it broke out of this trend line and it surged higher. But this is the first time in history we've ever seen the 10-year yield go up over 100 basis points now, and we've seen the Fed funds rate drop by 100 basis points. That's never happened in history. And again, this is because right here, the bond market is expecting more inflation. Fed started cutting with their rate cutting campaign, and now the Fed is second guessing themselves. And I told you, maybe it's the bond market that's causing them to do that, coupled with maybe the election, because again, Wall Street likes President Trump's economic policies. The narrative is we're going to have this booming economy now, roaring hot. Bond market worried about that, worried about the tariffs as well, worried about inflation, and that's probably what's causing the Fed to second guess themselves. We're still going to see the rates go down, but it's going to be because we're going to have a recession that we're being told we're not going to have, when the recession indicators are telling us we're going to have it. That is what is responsible for the sell-off today. Now, I still think we're going to get a January rally that's going to complete the blow-off top. I still think that's going to happen. I think we're trying to carve out a bottom here. I told you, again, it may not be done. We still may fill the gap from the presidential election rally right there, here at 57.83. That's possible. I've drawn a parallel boundary here with the black trend line, this black bold trend line right here, parallel to the boundary that I had drawn for the upper boundary of the rising wedge. We had our triangle break down rather than break up, so we never did reach that level, and we didn't reach the boundary of the channel in the weekly time frame. More about that, important stuff about that. But like I said yesterday, again, if we bottom right here, I've got the dotted blue line right here. We've had this low from the first day of trading. We had some volatility, but then we bottomed out and got a little bottoming tail, and then we had this rally up over the last few days. Now we're selling off, tech-led sell-off, concerns about inflation and the 10-year yield rising. we get the FOMC minutes tomorrow. There could still be more volatility. I'll be watching this gap fill area. Do we fill it or not? I've been talking about the gaps overhead. I've been talking about the gaps directly below. I'll show them to you on the 60-minute chart in just a moment. Again, I told you back over here that if we sold off, again, we could drop 59.70 down there up here. I told you we could drop a couple hundred points and fill the gap down here, or 300 points and come down here to 56.70, exactly 300 points from that high, which was a back test of this trend line. So again, I'm watching these levels. I'm watching the gap fill. I'm watching, my potential channels. I think the rising wedge could be expanding into a channel. I think that's likely. If the gap fill, if we go beyond that level, then I'll be watching horizontal support here, 56.70, and then the 200 period moving average in the 55.60 area. By the way, the measurement of the head and shoulders pattern. I don't know that we go that low here, but I'm watching. My guess is we have an ABC type of a move here, and that we're going to end up pushing higher, and again, probably towards the trend line in the weekly time frame, and I think that will take us above the high from December 6th. I'll show you why I think that. I'm watching to see if we now develop a channel, if the rising wedge breaks down and we develop a channel here, or maybe a different formation for another rising wedge, maybe from this red trend line or something. We'll be watching, but I think that we could rally in January, and I think we're just pulling back. Again, we've had this rally. I think we're pulling back, but if we do push lower, again, watch the gap fill. Another gap from the second day of the trading year on January 3rd. Here we had some volatility initially on January 2nd, got a bottoming tail, and then on January 3rd, on that Friday, we gapped higher and we rallied, and then we gapped again, tested the 200 period here on the 60-minute chart. Now we're pulling back, okay, and after gapping down a couple of times, we did come back and we filled this gap right here, and then we turned back down. Now we're pulling back. So we have this gap directly below. I talked about the gaps directly above, which was this gap right here that we filled at 59.72. We got above 6,000, and then this gap we fell short of it, and this gap we fell short of it, and we come back down. We've come back down now to fill this gap right here that we had, and there's another gap down here at 58.59. Now, if we take out that low from right there, you have a gap over here at 57.83. So some different gaps I'm looking at, gaps down, gaps up, and again, we'll be watching to see if this low can hold or not. If it doesn't, if we go a little bit lower, then again, fill the gap, then you have, again, still a possible channel that could develop. And maybe it develops with that dotted blue line from this low, maybe the black bold line a little bit lower, but I'll be watching. We had a divergence that gave us this rally. I'll be watching. Do we get another reference point of a divergence and see the RSI come lower, or do we confirm a higher low here and we have this low hold up and we resume the advance? We'll be watching to see how it unfolds. That bearish engulfing candlestick now after a 20% advance on NVIDIA, selling off 6.25% or so, just under 6.25%, but it was a bearish engulfing reversal bar. So again, will it be confirmed to get a follow through? We'll be watching NVIDIA closely. NVIDIA still could rally higher to a new high, as I've talked about the trend line on the weekly chart. Talked about that yesterday. Watching the MACD and the RSI, did we confirm a higher low, or do we get another reference point of a divergence and end up forming triple bullish divergence here on these charts? Again, we still may see the Russell come down here and test this trend line in the 200 if the S&P does move to a new low. So that's certainly possible. I've talked about this channel and here on the weekly chart of the Russell. So watching that, and again, if it does go lower, we can get a divergence with the S&P, something like what we had over here, as I've talked about at great length and detail in 2022. S&P made a new high and the Russell didn't. Watching the Dow, again, the Dow and the Russell, they're kind of hovering around the 100 period moving average. So again, going to be watching to see if we get the traction back up. And again, I think we've had this sell-off in December. I think we can see a rebound in January. The question is the bottom in here, and we're going to start that rebound with the new year here, or is there more work to be done to carve out a bottom before we get any kind of meaningful bounce? Nasdaq got that candle of indecision yesterday. The doji, the S&P got the spinning top, and we saw the sell. They're coming back and filling the gap higher from yesterday. Okay, and again, we'll be watching these lows over here from January 2nd, the first trading day of the year. Also got that topping tail on the monthly chart for the Nasdaq. Watching to see, does tech end up getting a bigger sell-off and the market still rallies? The S&P rallies to a new high. Does it end up diverging with the Nasdaq or not? That's still a possibility. I keep talking about that. We got that topping tail on the monthly chart. The P monthly bar, it sold off for the month of December, and we dropped by about 4.5%, but the Nasdaq, it got a topping tail, gravestone doji, you can see right here on the monthly chart. So we're watching that closely. Does this high hold? Will this low get taken out, and will we get a confirmation and a follow-through by the end of January? We'll be watching to see how it unfolds. Maybe we get the back reversal bar, certainly possible, but do we go make a new high? Now, again, point in a NVIDIA rally, then that would help the Nasdaq. Remember, at the June peak, we did see a divergence between the two. Nasdaq ended up going higher, NVIDIA did not. Again, times they diverge from one another. We'll be watching to see how it unfolds. But again, watching this topping tail closely, I'm expecting a bigger rally in January. We'll see if this reversal bar ends up getting canceled out, or if we get another one, or will it be confirmed with a close below the December low. So we'll be watching the Nasdaq 100. Nasdaq 100 was down 386 points today. It was down 1.79%. And again, we had some volatility to start the year off, and then we had that gap higher on January 3rd, and then we continue to gap higher here. Didn't quite come up here and fill the gap on the Nasdaq, and we got this gap way up here. I'm watching to see if that's going to end up getting filled. Move above that topping tail high, but watching to see, do we now get a higher low above this low after dropping about 6% on the Nasdaq 100? Or are we going to form a divergence? Another reference point, we did have this divergence give us this bounce right here on the RSI and on the MACD down here. Do we get a higher low established? Maybe come back, fill the gap, or right here at gap support, we try to bounce right here on NASDAQ. We're at gap support now. Here's the gap filled directly below at the levels just under 21,000 in the high 20,900 range. But if we take this level out, then again, we may try to go down and fill the gap from the presidential election rally. So we're going to be watching. Do we get a multiple point divergence? Do we take out this lower? Do we establish a higher low? Again, candlestick in the monthly time frame is meaningless unless it gets confirmation and a follow through. So do keep that in mind. As I keep saying, momentum is bearish. It turned bearish for the S&P 500 on December 18th, the Fed day. And again, the Fed reduced the amount of cuts that they were penciling in for 2025 from September at 4 cuts in 2025 down to 2. The Fed Fund futures, the betting markets, now betting on just 1 cut, and that the Fed is going to pause May. And I'm telling you, we're going to get the rate cuts. It's going to be for the wrong reason. It's going to be because it's going to be blindsided by a recession. The bond market is worried about inflation as well, rather than a recession. We're worried about a recession, we would be seeing rates dropping. Again, it's going to blindside the Fed. It's going to blindside their herd and the bond market. Nobody thinks that's coming. Nobody thinks that's not even on the radar. So again, but the recession indicators are predicting we're going to have one. I happen to believe the recession indicator. Again, we tried to flip momentum yesterday, but we couldn't do it on a closing basis. Momentum remains bearish. You have a red cloud, you got the red bars, the red dots, everything is bearish. And the risk is that we still come down and fill the gap, get something uglier at 57.83, filling that gap there. Again, as I keep saying, momentum has to flip back to bullish in order to turn around. We'll see if the market sells off with the FOMC minutes tomorrow. Good. That's why I've talked about that. It could. Fed is extremely hawkish right now. So again, we got a hawkish rate cut, a hawkish FOMC press conference out of Powell. Probably going to get hawkish minutes. And we have Inauguration Day coming up. hopes of the economy roaring forward and giving us the leg of the bull market will likely take the S&P to a new all-time high. And we're still seeing signals bearish with momentum. So again, we could get a bigger corrective move, but I am watching the gap fill and horizontal support, which is this line right here from the July peak at 56.70. These are the levels that I talked about. We were back testing when we were rallying back up. So again, we move to a new low. What do we do at the FOMC minutes tomorrow? Same thing with Nasdaq 100. Again, momentum is still bearish. We tried to flip it yesterday at the intraday highs, couldn't do it. Now we turned back down and we're dropping back below the 10 and 20 period moving average. A big sell-off after rebounding off of the lows from January 2nd. Watching the MACDs again here with Nasdaq as it recycle back up. At S&P's MACD, I believe, is slightly negative. Bring that back up here. Do they recycle back up here and we get the next leg higher on S&P or probably Nasdaq? Or do they stay in negative territory here on S&P and Nasdaq doesn't go negative and we end up getting a bigger sell-off? So we'll be watching.